Ladies and gentlemen, welcome back to the channel. This is a very important video. I will explain and show you what happened to markets today. Tesla's stock got absolutely destroyed. And there's a couple different reasons for this. And they do introduce more uncertainty. There's some aspects of today that really do not look good. There's some other aspects that say, maybe we could bounce from this. I'll share that with you here in this video. And what could be coming next for Tesla, because we do have to face it. Today was not a good day. Down 4.5%. You are below your 100-day moving average at $342 per share. So, ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. Let me know your thoughts on this down below in the comment section. If you think this is the start of a larger crash, or if you think this is a buyable dip opportunity. So, first things first. Markets reacted so negatively today for 3 different reasons. As we talked about in the video earlier today, coronavirus fears. There is a new coronavirus found in a bat or bats in China that is said to be worse than any of the other coronaviruses that we have seen so far. It could give people MERS, which is Middle Eastern like respiratory infection. Okay, so that was not good. Now, when I really think about this logically, we're not going to have a lockdown here in the U.S. unless this were to be some very deadly virus. And in that case, all bets are off the table. Couple things here. We're probably not in that first scenario. And number 2, you don't have anyone that's actually gotten this yet. Now, if someone does get this, or this becomes a bigger issue in China, then that I think will need to be a bigger topic of conversation. But it does introduce uncertainty, whether or not this will spread. But I think the big uncertainty right now is, how does China respond to this? And that's where you have some direct implications for Tesla, because Tesla does a lot of business in China. If China wanted to do some kind of lockdown, I don't know if that's something that they would do or not. Sounds like very, China-like behavior if there is going to be a crisis again. Okay, for better or for worse, that's not going to be great for Tesla from the standpoint of buying a car. If people are locked down or, not working, stuff like that. So that's where you get some of the negatives, I believe, tied to Tesla more than other stocks today, is because what does China do? And bottom line, that's just uncertainty if China does anything or does nothing. Okay, and I think we'll know more over this weekend. And we'll come back to Tesla in just a moment. But this is really one of the big drags on markets today. You could see TLT actually did very well today. You went higher on TLT following the data today. And then all throughout the day today, you just had more and more people piling into bonds. Now, that's actually lowering 10-year Treasury yields as people go out and buy the bonds. But it's really a flight to safety. That's the part that I don't like about today all too much. This is a flight to safety, whether we are having a flight to safety via the coronavirus fears or the second one, consumer weakness. The data that came out today was not great. And I actually think it's both of these things that are causing investors to go out and buy bonds, which, it's hard to kind of distinguish between what's having the biggest effect or whatnot. But I think they're both having an effect today on markets. Because the data that we got this morning was just really bad. I mean, S&P Global Composite PMIs came in at 50.4. The estimate was 52.7. Manufacturing PMIs came in at 51.6 versus estimates of 51.5. Services is really what got people kind of nervous. That came in negative for the first time in a long time at 49.7 versus estimates of 53. So we were actually expecting services would improve from last month or from January. It did not. Okay, did not improve. It got substantially worse. And this all comes at a time in which Walmart yesterday warned about a consumer slowing down, and Walmart lowered their guidance. Big, yellow flag, if you will. It's not a red flag, like sell everything kind of, warning sign, but it is definitely a bright yellow flag on the consumer. Okay, so now you have the services PMIs that just came out. You have Disney that on their last earnings warned that people are not going to the parks as much anymore. Yeah, Disney parks are outrageously expensive. Okay, that has something to do with it. But that is a new change from prior years where Disney was just packed. People are slowing down their spending behaviors. And for an economy that's 80%, 70% people spending money, that is problematic. And, I think there's good news and bad news here. Good news is with a weaker economy, inflation's not going to be an issue. And good news also is the Fed's going to be cutting rates sooner than expected. The bad news is when the economy weakens, it tends to weaken a lot. Is the Fed too late? Does the economy go into a recession? I don't think so, but it's always, a possibility. The U.S. economy doesn't really just fall into recessions these days. Normally it's, there's some kind of catalyst that pushes you into a recession. Now, as far as what the bond market is pricing in for Fed policy, you went from a 1% chance of a rate cut March 19th up to 6% today. So, no, you're not pricing in a cut coming in March, but you're getting a lot closer relative. You went from 1% to 6%. That's a big day-over-day jump, if you will. Now, May 7th, the odds of a cut on May 7th went from 21.4% yesterday and to 28.8% today. There's now almost a 2% chance of 50 basis points of cuts by May 7th. June 18th, the markets are now pricing in your first cut. It was July previously, so it did get pushed up to June today. Okay, 47.7% odds of a cut June 18th, and 14.2% chance of 2 cuts, and almost a 1% chance of 3 cuts by June. So there's definitely some fears about the consumer slowing down, consumer weakening, which is, again, not great for Tesla. If we're thinking about Tesla specifically, a car company, consumers slowing down, losing their jobs, so on and so forth, never going to be good for a stock like Tesla. And really that correlates with this is oil. Oil is down about 3% today, and that has to do with expectations of demand. If people start to lose their jobs, that's a problem. But you can see how this is kind of hard to differentiate between what the markets care about most. Is it the pandemic or is it the weakening economic data? Because oil would cause the same reaction. If China's going to shut down, then oil prices are going to plummet. So what's causing the 3% drop? What's the biggest, factor there? I do not know. Now, as far as the broader indexes, Russell 2000 down almost 3%, definitely the worst performer today. NASDAQ was down about 2%, S&P down 1.66%, and the Dow down about 1.3%. Now, you're still in, after hours trading or whatnot, so you're going to have some fluctuations here. The VIX, though, was up about 20% today. This is a pretty aggressive VIX spike. And, this just tells you there's a lot of puts being bought on our markets right now. People were kind of slapped in the face with this and caught off sides. And that's not great. Now, if you look at CNN's Fear and Greed Index, that is really plummeting today from 45 yesterday down to 36. So that's a huge drop. Okay, almost a 10-point drop in a single day. You are back to about the midpoint of fear. Not good. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth is fear. Put and call options, greed. Market volatility is neutral. Safe haven demand, extreme fear. Junk bond demand, in fear. So most of your categories here do not look good at all. And specifically market momentum, that's something to watch for. Suggesting we could fall to that 125-day moving average on the SPY. Now, what's actually interesting about this is you are almost down to your 50-day moving average. That is at about $598.82. A break below that could set you up for a retest of your 100-day moving average at about $591.30. But a break below that could send you down to 566. Okay, now there's going to be a lot of uncertainty with this whole pandemic round 2 situation, okay? I think that's going to come and go. What I mean by that is, like, today may have had a lot of fear about this. Coming on Monday, if we don't have any new news, I don't think the markets are going to be reacting to this all too much. But the moment when people start to get infected by this, that's when we have a bigger problem. Now, could that be announced over this weekend? Possibly. What is China's response to this? That is going to be very important. And I do not live in China. I do not, understand what China would do, what their response would be to this. If they would lock down or, do some kind of, measured approach. I don't know. And that's where the uncertainty comes from. Now, I'm optimistic that this is not another pandemic. But until we know more, until there is spread, you do not know. Or maybe there never will be. Maybe there never will be. Maybe nobody ever gets this and we don't hear about this and it'll be over with. That's something to consider. Now, the economy is weakening. That's a problem, okay? Because we are all expecting a pretty good year this year for the economy. And this data was pretty shocking today because nobody expected services were actually going to go negative. And I think this really has the Fed on lookout here. Now, good news is, Treasury yields are falling today. Treasury yields are falling, which, like 10-year Treasury yields, that is great news for the economy, for borrowing cost. And the Fed is not doing anything. Like, they're not cutting rates or anything like that yet. 10-year Treasury yields fell about 8 basis points today, down to 4.41%. If you get 10-year Treasury yields that materially break lower from here, ultimately that'll be a good thing for the markets. But, how much weakness do you see and how does that impact corporate earnings? So for anyone that's like screaming the bear narrative at this point, I think it's fair to say there's uncertainty, but we have no idea how bad this will get. If this is going to be just today event and it's all over with, there's absolutely no certainty there. Okay, so the percent of stocks trading above their 50-day moving average, sitting at about 42%, little under 42%. 7.2% of stocks today fell below their 50-day moving average. That is a rough day. Rough day. For markets, just broadly speaking. And, maybe this is an opportunity. Again, there's that uncertainty that maybe this does get worse. Now, for Tesla, that fell about 5% today, you're below your 100-day moving average. That is not great at all. And Tesla has already had a lot of, fear recently. There's already been a lot of weakening in Tesla. Tesla's down like 30% from its all-time high after today. I'll get the exact calculation for that. Down about 31.3%. 26%. That's crazy. Okay. And China, and Tesla, if this situation does get worse in China with pandemic number 2, if that happens, then Tesla's in a unique position where they do a lot of business in China. And that would really not benefit Tesla unless there was massive stimulus and this was a short-term event. Then obviously maybe more Chinese people would go out and buy a Tesla. You could spin that positively in the medium term if you want. But as far as fear in Tesla stock, anything that has to do with a new potential pandemic is going to be seen as really bad news for Tesla. That's the bottom line. Now, I don't know exactly what's going to happen next for Tesla. Problem is, we don't have any real support until you get down to about 310. So if you fall to 310, you're going to find some support there. Below that, you're going to fall to that 200-day moving average at $275 per share. That's where things really start to get rough. And in this range, I think you'll have a lot of buyers coming in. I think you have a lot of buyers coming in right now. But it just really depends what happens next in China. And that is highly uncertain. And there's really no way of forecasting that at all. Option activity today, despite the 5% drop, was actually okay. You had 300 different trades from hedge funds and institutions, totaling $219.22 million, with a positive order value of 55%. So was not terrible by any stretch of the imagination. And look at this. Yet again today, you have 500,000 shares being covered by big money. Big money is covering as Tesla is falling. That gives me hope. I wouldn't say confidence, but that gives me hope or a reason to believe that this is an opportunity to buy Tesla. But when you're talking about a new potential pandemic, and I have no idea what China would do, that's going to be an issue that hangs over Tesla until we either don't get any new headlines for this or it does evolve into something else. And that's why Tesla is down so much. But it is good news. Short sellers are covering today. They're not adding to their short positions, considering Tesla would be in a very much not ideal situation if there was another pandemic, even if it was only localized to China. So these are kind of my thoughts here. Bond market, kind of spooky how the bond market just, bought this up. People really ran to bonds today, which typically is not a great sign. Bonds are, really risk off from an equity capital perspective. You really only buy bonds when you think interest rates are about to come down, when the Fed's about to cut rates, or there is a serious problem out there. And again, I think the economic data today sent 10-year treasury yields up and people buying bonds, and also this pandemic situation. But it's very hard to tell what the markets care more about today. Do they care more about this pandemic situation or the U.S. economy weakening more than expected? So let me know what you guys think about this down below in the comment section. That's going to do it for this video. If we get new information tonight, I will share that with you as soon as I hear it. Trust me, I'm on lookout now for anything that has to do with coronavirus in China. And remember, before the first coronavirus hit in like January of 2020, we were getting videos and images from inside China that looked like a biohazard war zone, okay, in certain areas like Wuhan. If this does evolve into something more serious, you're going to see a similar kind of situation before it's even talked about in media or in the headlines. So that's definitely something to watch out for, and I will be doing that. So ladies and gentlemen, let me know what you think about this down below in the comment section. Did you buy the dip today? Did you buy some puts today? Let me know your thoughts down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.